Okay, good evening, everybody. Welcome to tonight's copy time. I do apologize. I'm about 4 minutes late. Sorry to keep you guys waiting. If you can hear me loud and clear, could you just put in the comment section below? Now, this session is dedicated to you guys. So whatever stocks that you want me to review and look at, all I'm going to do is actually do this for you and actually analyze the fundamentals. So a little bit like Benny's Technical Monday. We call this session bull or BS, right? So whether it's a bull like as in like bull market kind of bull, or is it BS, right? So we're going to verify kind of rumors with also the facts. All right. So thank you, Stephen. Thank you, Florence. All right. Tay Tian Lai, thank you. All right. Florence, good evening. Jitinder, welcome. Good evening, everyone. Okay, so welcome to our session tonight at Copy Time. Again, this session is dedicated to all you guys, so you can kick it off, right? You guys can kick it off and post any companies that you actually want me to analyze, and I'm going to do it absolutely free for you guys, right? Good evening, Alexis, right? MK, good evening. Carolyn, thanks. Okay. So welcome. All right. So let's get started. I do realize I'm running a bit late. So let's get it kick started. Push me any. I think I already got one request here, which is from Tay Tian Lai. Super Conmet. Okay. So I'm gonna just quickly share my screen. Let me just log in. And then we can do that. Posted. Okay. So let me share my screen here. So as you know, I hope you guys are all keeping safe at home. For those of you who missed out on our Investor Studio session yesterday with Mr. Benny Lee, we actually featured Tech Bond. So you guys can go and watch that video again if you want to check out Tech Bond, where we had the Deputy Managing Director of Tech Bond to share a little bit about the business and their latest quarterly results. All right. Power Root. Okay. Hi, Mr. Saw. Welcome. How are you? Okay, so here I am. So let's. So as you all know, this is Equities Trackers platform, and you can sign out for it absolutely free for 2 weeks. Just go to equitiestracker.com/free, and you can set up a free account. Of course, if you guys want to contact us, our phone number is 603-8408-2070. You can contact any one of us. Send us a WhatsApp and press I think 0 if you want to speak to someone. If you have any questions, all right. So this platform, you guys can sign up absolutely free for 2 weeks, right? Okay, so I'm gonna go try Super. So I just type in Super. Let me see what I get. Okay, Super Conmet Technologies, right? I'm just curious. Why this stock, right? I'm just curious what's the story. So what I'm going to do is I'm going to analyze the financial numbers for you guys, and you decide whether it's a bull or BS, all right? So very quickly, I can just see that the share price has kind of been trending down, right? But of course, when it comes to technical analysis, Mr. Benny Lee is your guy every Monday. Don't forget to tune in at 8 p.m. So if I click on the profile here, the market cap is now 1.2 billion, right? So this is a 1.2 billion market cap company, so fairly large. It has been listed for more than 18 years, so about 18 years now. So I'm going to zoom in a little bit so that for the benefit of those who are watching this on your phone, right? Best viewed on your TV, right? On your home TV. So 18 years, if you look at it, if you have bought and held this company from day one for 18 years, your compounded return is 14%. That's pretty good, right? 1.2 billion, right? Okay. So in the subsector of cable, cords, accessories, and related materials, right? So let's quickly look at the financials now. So this is where I look at the 10-year financial statements if they have it. And what we do here is actually look at the profit and loss, the balance sheet, and also the cash flow statement as well. Oh, App Asia. Okay, it's quite interesting from Linda. So let's check it out. It's got our internal scoring, FQA scoring at ET of about 65%. Let's take a look at them. So 10 years ago, they were doing about 33 million in sales. As of their latest audited financial year of 2019 of 31st December, uh, actually only in 2017, 2018, 2019, they've kind of grown from 34 million to 122 million. Their net profit has been about 3 million, 6 million, right? It jumped to 11 and of course 19 million in 2019. I don't know if it's because of an M&A. Let's look at dividends. So out of the last 10 years, only the last 2 years is kind of trending to start paying dividends. The last time we paid dividends was back in 2012, right before that. Now, I think there must be a change in business or injection or acquisition. Its gross margins has gone up quite significantly, 40% from 20%. So there possibly could be a change in business here. And its profit margin before tax used to be about 4%, 2%, 8%, 5%, and then it jumped to 16 and 19%. So let's look at this now. Its cash flow, it's kind of up and down, except for the last 2 years. Its cash flow has been pretty strong, 12 million and 24 million. This is operating cash flow. And if you look at the net profit, you look at 11 and 12. So they've had. So if you look at this figure here, operating over net profit, operating cash flow, net profit, that means whatever net profit they are reporting is also backed up by operating cash flow as well. So possibly is it a turnaround? Okay, its cash position has kind of, from 2010 to 2017, it's kind of remained stagnant. But 2018, they had 41 and 55 million in cash. So it seems like possibly a change in profile here. Now, they are also in a net cash position. So 55 million as of last year. And 6 million in long-term liabilities. So they are kind of quite safe in a sense on the balance sheet. They have a lot of cash and not a lot of debt. All right. Let's look at the latest quarterlies to see where they're at. If you look at their latest quarterlies, I think first quarter obviously took a dip. Second quarter took a dip. It seems that the third quarter have rebounded quite strongly, better than the last Q3 in 2019. It's about 122 million and about 19 million in profit over this period of time. So it's quite interesting, right? So what I can do here is look at its Q-on-Q comparison. So actually, except for Q2, which was the period where we were under MCO, April and May, every other quarter has been rebounding. So they are actually getting better than they were previously, right? So you can look at these numbers here. They basically tell you that everything is on a rise, a green, right? Now let's see if they have actually started paying dividends or not. So 2019, they did a bonus issue, 1 warrant for 3. So it wasn't a bonus issue, but it was 1 warrant. They gave 1 free warrant for 3. Yes, actually, this year they made 2 dividend payments of 1 cent and half a cent of special dividends, right? So it seems like potentially it is a potential turnaround company. Okay, now if I look at the shareholding here, let's look at the shareholding. So this gentleman here, James Shui, is essentially, the main shareholder here is 20%. Wu Huing Chun and potentially the Wu family here, potentially. Mostly held by individuals. Like when you see this alliance group, this is likely a nominee account, which is like possibly could be pledged securities or just a nominee account. Mostly held by individuals, not by institutions. If I quickly look at the directors, so the directors only sit on 1 board, right? So all of them sit on 1 board. Okay. So let's have a quick look at the share prices. Let it load. Yeah, it seemed like there is a massive rebound in their share price since 20. Oh, of course, this was during that MCO period. But pretty much, if I kind of scroll back and kind of look at the long-term prices, it's been on the rise, likely because it could be a new business, right? Yeah, so you can see the long-term price chart, it was kind of flat and not really moving except for the March period. It's kind of bounced back. Of course, now it's moving towards a downtrend. Now let's look at the valuation here. Does the price support the fundamentals? Okay, so it's currently trading at last year's PE of 61. Okay, so unless they have a massive growth story, that means if they can double their net profit of last year this year, which I think we're already ending the year, then you bring your PE down to 30, right? I guess the big question is, what is the story behind this to actually warrant a PE of about 61? All right. So Tay, I hope this kind of helps you answer that question about this business. Perhaps you could share a little bit of why you're looking at this company as well. Then we can look at this. If I kind of look at what industry they're in compared to everyone else, in this subsector, it seems that they are the largest by far, 1.2 billion. The next somewhat competitor or in the same kind of industry is PIE, right? 700 million, right? So they are the priciest, I would say, in this segment here. All right, so let's. I hope that clears it up for you. Okay, let's see what else we have. Okay, good evening. Power State or Power Root. Oh wait, hang on. Before Power Root was IJM. Okay, IJM. Let's check out IJM here. I assume it's corporation because there's also plantation as well. So let's look at their profile again. Market cap, they're in construction, $5 billion market cap. So it is a big cap. Listed for 33 years, 33.34 years. Its compounded return on price alone is 4.81%. Latest PE is about 23. Let's have a look at their fundamentals. So based on our FQA scoring, they have 85%. Okay, so let's look at them. So if I kind of zoom out a little bit, okay, their financial year is 31st March, yeah. So they've grown from 3 billion to about 6.6 billion, so almost double in sales. Profit is kind of choppy. I assume if you are a combination, I think they are a bit of a conglomerate, right? So it could be a mixture of earnings from their plantation sector, potentially their land as well. They are quite fairly generous with their dividends. They on average pay about 40 to 50% of their profit out as dividends. If you look at this, it seems like quite a trend. Their cash flow is fairly decent as well. If you look at, but let's look at their net profit margin. Their margins fluctuate between 18 to 22 to last year 7%. I guess it depends on what kind of business they're in. If they're very highly transactional or project based, different projects will give them different margins as well. So in terms of cash flow, their last year's cash flow was actually very, very strong, 1.6 billion in operating cash flow. In terms of balance sheet, okay, let's look at the balance sheet. 2.7 billion in cash and about 8 billion in liabilities. So I wouldn't say it's over leveraged. I also wouldn't say it's under leveraged. They're definitely not in a net cash position. But if they can keep up with their operating cash flow, I think they are definitely able to service this debt. Because if you look at this ratio here, which is cash flow over short-term loan and long-term liabilities, which means that if they pay no dividends, actually based on their cash flow like this every year, they can pay it off, in 5 years, right? 21%. Let's look at their latest quarterlies. I guess to be expected, their Q1, which was the MCO period, their Q1 revenue was down due to probably unable to run the business effectively because everyone's locked down. If I look at their quarter-to-quarter comparison, everything is, well, these few periods were down compared to previous year. Everything is actually down on a year-to-year basis, right? On a year-to-year basis. Naturally so, I would imagine. Shareholders, what are shareholders? EPF is their largest shareholder, right? Then Kupalan, Wang, Posaran. So a lot of institutional shareholders here. A lot of institutional shareholders here. If you look at their directors, so this director is also part of MBSB and Plantations as well. This is an independent director. It's all here, right? So these are some of the directors. So if we look at the valuation based on last year, of course, if they're very project based, then you can't really use PE as a base, but based on their PE, you're looking at 23, 26, right? So if you're expecting their industry to rebound, then if they're expected to double their net profits, then you're selling at a P of 12. But again, if it's very highly transactional, their business, then PE may not be so relevant in this case for valuation. All right. Okay, let's look at this here. So I have a question here from Hua Lun Li, right? Do I look at TAM? I assuming you mean total addressable market. Yes, absolutely, of course, right? And you kind of want to actually you look at total addressable market versus what their targets are, then you kind of figure out whether it's realistic or not. But of course, it's anyone's to say. It's anyone's guess is whether or not they can actually hit those market penetration rates as well. But in this case, in this segment, we're purely looking at financial numbers to see whether they make sense or not. All right, whether it's bull or BS, right? So IGM done. Okay. Okay, so like last week, right? If you tag 5 friends, right? I'll make sure I'll push your company right up to the top so that I'll give you preference if you tag five friends to this show right now. Okay. So let me see. So I'm gonna go in alphabet. I'll go in chronologically, but if you tag 5 friends, I'm gonna push you right to the top. All right. Let's have a little bit of fun. Okay. So Power Root, MK. Here we go. Power Road, as you know, they make your coffees and your Ali Cafe and Ahwat Coffee, right? So you have several brands. They also export market as well and also local market. If you look at Power Root, let's look at their financials here. Okay, well, let's look at the market cap first. Let's go step by step. Market cap is about 800 million for FMCG company. Their PE is about 17 based on quarterly numbers, about 19. So if I look at their financial numbers here, well, they have kind of grown and then come back down a little bit in the last 2 years, right? So this is quite significant drop for FMCG. Of course, it seems like they may have written off something here. Otherwise, their net profit has fallen quite dramatically. Their gross profit seems to be kind of recovered back to 2018 numbers at their peak. The profit last year was 51 million, which seems a little bit abnormal because this is a very, very high margin. This is very, very high margin for this kind of business. So their net margin, well, yeah, it's about 13%. On average, they've been going about 6, 7, 11, 12, right? So without looking further, I don't know where that extra income may have come from. They pay very good dividends. If you look at the dividend payout, it's almost 100%. Every year they pay out dividends, right? So very generous in dividends. So last year, earnings per share was 12 cents. They paid 2.5 cents, so almost 100% of their net profit. Cash flow is very, very strong. 89 million based on last year. It has been steady on the rise. Their cash has also, they've actually, even though they've been so generous paying dividends, their cash numbers have also gone up quite significantly. 100 million in cash and almost no debt, 8 million, right? So they are definitely what I call net cash, very safe kind of stock, right? Let's look at the quarterlies. Well, I guess kind of given Q1, Q2 or Q4 because their financial year end is 31st March. So if you look at it, they kind of seems to be on a downtrend in revenue, right? But they seem to pay dividends every single quarter except for the last quarter here. They used to pay every quarter except for this portion here. Net profit is still up at about 44 million. Of course, this is FMCG. So if I look at their quarter to quarter, they were generally up except for the last 2 quarters here. So granted, so most FMCG companies also reported a lower revenue and also profits, right? So this is not abnormal here, but they're still definitely in a profit, a lot of cash. Who are their shareholders? So this gentleman here, Mr. Wong, seems to be the biggest shareholder, 10%. Of course, you also have some what I call funds that are also invested in this company as well, but mostly individual investors. So if I look at the directorships, okay, so you can see these are some of the directors. He's also on, this gentleman Dato is also on Valesto, but generally everyone sits on only one board except for the independent directors. All right, so at 800 million, so their PE is about 17, right? For market cap of 800 million, right? If you held this stock for 13 years continuously, your compounded return is only 3%, right? Of course, that may signify that maybe the share price is probably a little bit undervalued, but let's have a look here. So again, by the way, before I continue, there's a disclaimer here. This is purely only for educational purposes and not meant for as financial advice. So if you look at this year, generally share price has been it was down a little bit obviously during this period. It's come back up, but it's let's look at the long-term share prices. Yeah, it's kind of almost selling at your 7-8 year ago prices here. So potentially is there a price and value divergence? Don't know, possible. Okay, so that's for Powerroot. All right, so let me see if I have any. Okay, Lawrence. Okay, wow, Lawrence. Lawrence got two. Which one you may do first, EITA or Kim Long? Right. Let me do both. Thanks for tagging your friends. I'm gonna push you up here. Okay, let's look at EITA resources. Market cap 240 million, so quite small market cap. P about 11 to 14. Let's look at their financials here. Pretty decent, 86%, although they've only been listed for 9 years here. So their 150 million sales has jumped to 300 million in 2019, 12 million profit to about 20 million profit. They seem to be quite consistent about dividend payout, about 30 plus odd percent. That seems to be the average. Excuse me. Profit before tax margin 9%. Net profit margin seems generally quite steady, 6-7%. That seems to be their profit margin. Their cash flow is quite decent, except for only 2 years with negative operating cash flow. But last year they did 24 million in operating cash, positive operating cash flow, and also almost every year with free cash flow as well. Also another company in a net cash position. Their cash position has gone from 17 million to 68 million, and their short-term loan and long-term loan is 30 million. So they are definitely in a net cash position. Right? So the balance sheet looks quite okay. Let's have a quick look at the quarterlies. Seems like, of course, they're still able to do sales, but I believe if I do a quarter-on-quarter results, they are probably down the last 2 quarters. I believe to be expected, right? We are in a recession now anyway. So let's look at their charts and prices. So the long-term price, okay, no wonder you're interested, right? Because suddenly it went from $1.20 to probably close to $2 today. So it gapped up recently, right? 180. EITA resources. What do they do? Automation. I'm not sure. Are these so EITA here? Let's have a look. So in terms of market cap, in this year they are number 7, 250 million. Quite small market cap, right? But definitely profitable as well, right? So if you look at their compounded returns, quite decent, 8 years, about 10% compounded returns, right? I think they're in elevator system, power equipment, cabling system. Yeah, so I think elevators are they in. So P about 11, 12, rolling quarter 14. I would say it's very, very expensive, right? So 250 million here. So that's EITA. Let's look at Kim Long. If you guys have any companies that you want me to look at, happy to do it here. This segment is dedicated to you guys. All right. So the first, if you want to be pushed up to the list for me to quickly do it, just tag 5 friends. All right. Kim Long. Let's look at Kim Long here. Market cap 1.5 billion, so large enough. They are obviously in a plantation business. So let's look at their financial numbers. So 500 million, they grew to 1 billion, and of course it's dropped to 679 million. Profit wise, kind of up and down. Yeah, they seem to be quite generous with dividends, also 60 to 70% on average. Some years 100%, 80%, 90%. Their net margin is between last few years probably 6 to 8% on average. If I kind of look at this number here, cash flow. Well, they're quite healthy cash flow wise. 96 million, 136 million, 100 million here. Of course, every year they've got free cash flow. Their cash balance is actually gone up quite significantly over 10 years, 100 million to 200 million. Their short-term loan, long-term loan, 100 million. So, again, they are in a net cash position. So they are in the plantation sector. Who are the shareholders? So who are the shareholders here? Sharikat Kim Long. So I understand they are family run, so owned by the family as well. Directors should be mostly family. Like it's quite obvious. All the GUIs, all the Mr. GUIs here, executive chairman, MD, executive director. They also own a listed company called Crescendo. As you can see, they sit on 2 boards as well. Let's look at prices, right? Okay. Well, it's been steadily going up over the last few years. The question is, with oil palm prices now hitting an all-time high or close to an all-time high, you would expect some pretty good returns. So if I look at their quarterlies, you're looking at 800 million in sales. Last quarter, if you look at the Q2, it's gone up quite significantly, 154 million to 234 million here. Net profit of 10 million to 33 million due to higher prices in Q on Q, right? So if I look at the Q and Q results here, yep, everything is down Q on Q except for last 2 quarters. So if you see palm oil prices maintaining these prices, I think these numbers will jump probably even more, right? Probably even more. That's their business, right? Palm oil. All right. So again, if you tag 5 friends, I'm gonna move your company that I'm gonna cover up on top. All right. So Lawrence, I hope that covers the 2 that you have. Okay, I got Florence here with Bausted. Let's check out Bausted. Okay, so Bausted, well, Holdings Berhad. Okay, so Bausted owned by our armed forces funds. So if I look at their profile here, market cap 1.3 billion. Okay, don't think there's a PE because they probably made a loss. Well, if you held this share for 33 years, you'll still be negative today. So it means it's still selling cheaper today than it was 33 years ago. Let's look at its financials here. Financials 6 billion to about 10 billion in sales. They made 2 losses in a row here. Not sure why. They kind of stopped paying dividends last year. No dividends as well. Net margin between 8 to 4% or 4 to 5% seems like the average here. Cash flow wise, they're cash flow positive for every single year except for 1 year. They must have wrote off something. I don't know what. We have to go and check. Free cash flow kind of up and down. Let's look at the cash position, 400 million to about 900 million. But they have about 8 billion in short-term loans and long-term liabilities, right? So that's quite significant, right? So 900 million versus $8 billion in liabilities. That's Bausted. Let's look at their quarterlies. Look, everything is red. They're in a loss position. If I do a Q on Q, you expect there's nothing here because everything is down, right? So everything is negative here. So they are definitely reporting much lower revenues than they were last year. All right. So that's why there's no PE. There's nothing there. Shareholders. Lembaga Tabung Angkatan Terata LTAT, right? They own 59%, so they control this company. Directors, very quickly, you can see these are somewhat linked: Baustate, Pharmaniaga, Axiata, Baustate, right? So these are these directors, all right? So, okay, so I hope that covers it. Florence, Baustate, Linda, App Asia. Okay, let me try App Asia. Look at this company for a while. I can't remember what they do. Let's look at the market cap. 250 million. Okay, not small cap. Let's look at their financials. Oh wow. Okay, so these are their financials. Revenue has jumped last 3 years, but they're still writing down losses. Not sure why. Gross profit margin very small, 4 million. Absolutely no dividends. Okay. Gross margin is 4%. Every single year, they almost every year got negative operating cash flow except for the last 4 out of 10 years. And also 4 out of 10 years they got free cash flow. Well, they're also in net cash position, 10 million versus 12,000 in short-term loan, long-term loan, right? I don't think there is a PE because they're in a loss position, so it's not available. So if I look at their quarterlies, let's look at their Q and Q. It seems to be down last 2 quarters, right? So got to figure out why. But this company doesn't make a lot of profit here, right? 35,000, 19,000, right? So what app are they doing, right? Or is there a story behind it? All right, so that's okay. So Simon Hector Global. So market cap 740 million, PE of about 300. But looks like there must be some change here because latest PE is only 18. Okay, so let's look at this. Revenue has grown. Well, there's a big jump in revenue here, so could be probably an injection of something. Lost money previously. Potentially it's a turnaround. They actually paid a dividend as well. Because previously 1, 2, 3, 4 years they didn't pay a dividend. Cash flow positive this year. Seems like potentially maybe a turnaround company here. Choppy free cash flow. Yeah, you get 29 million in cash and about 46 million in short-term loan, long-term liability. So I won't say it's very high risk in terms of the balance sheet. Let's look at their quarterlies. Let's look at the Q on Q. Seems like they're up for every single quarter except last quarter they were down. 181 million year before, 100 million year, but they're making profits about 12 million. So it could be a reverse takeover or an injection of new business diversification. Helped by Hector Holdings, right? Okay, so a lot of funds here. Hector or Hexstar, right? A lot of, okay. So I hope that covers it. DNext, okay. DNext, you guys have some really interesting companies to look at. Let's look at the profile here. Market cap, wow, of 400 million. Okay, not very big. PE of about 13. Looks like the quarterlies, they are in a loss position, to be expected, I believe. Let's look at its financial numbers here. Pretty good. Revenue of 87 million to about 290 million. Except for 2 years of losses, every single year seems to be up. Okay, 30 million. Um, Although they make profit, last year they didn't pay a dividend. They kind of choppy on dividend payments, so sometimes they pay, sometimes they don't pay. Well, positive operating. So this is quite interesting. 9 million in operating cash flow, but 30 million in net profit. Okay, so you got to figure out why their cash flow doesn't match their net profit. Free cash flow 13 million. Well, in terms of cash, they have about 54 million and about 76 million in loans, right, or debt. So not a lot. Or they're probably 20 million off from a net cash position, right? Quarterlies, let's look at the quarterlies here. Mhm. Okay, so well, everything's worse than last quarter. I think they started making losses here. So we gotta figure out, yeah. So they made losses in Q2 to be expected. They seem to have bounced back a little bit here by making some profit in Q3. So you gotta figure out what business they are in, right? Um, let's look at their prices. Okay, yeah, long-term prices kind of flat, very much flat here. Yeah, okay. Again, gotta check them out. What do they do, and whether their business, their net profit is sustainable. All right, that's from you, Simon. Okay, don't forget to tag 5 friends if you want to be pushed to the top of the list. You want me to cover your company here? Just tag 5 friends. That's it. Linda, yes, today new background. Yeah, it's not a green screen. It's real. Yes, this is the ET office. So I was stuck here doing some work, and I couldn't make it home in time. So I'm doing my live stream from the office. Yeah. Okay. So again, don't forget to tag 5 friends, and so I can push your list right to the top. All right. So okay, just one stock at a time. One stock at a time. Okay, I got from Hua Lun Li, Server Dynamic. Let's go and check them out. Market cap. All right, oil and gas. Market cap, very big, 5 billion. Big company here. Listed for about 3.83 years. Seems to be a big jump up recently. I guess everyone's speculating oil price has rebounded, so everyone's expecting oil and gas companies to bounce back. Actually, oil prices going up is actually a good thing, right? So we that means the economy is recovering, right? Well, no, probably project based, but for 1.4 billion to 4.5 billion, they make about 500 million. Again, is this project? Is it transactional or is it a relationship type business? They do pay dividends. Last 3 years, they've been paying dividends. They got decent cash flow, quite decent cash flow, 200 million a year. 1.3 billion in cash and 3.4 billion in short-term loan and long-term liabilities, right? So I guess infra play, oil and gas, you expected, to be quite capital intensive. Let's look at the last quarter. The last quarter is actually up from previous quarter. So even during the pandemic, they made more sales. So if I look at the Q on Q result here, everything is up actually, mostly up Q3. So they seem to be rebounding, right? So is it good value for money? So they're trading at a P of about 12 right now, and on a rolling quarter about 10. Question is, what's their order book and what kind of profits can they make and for how long? All right, so I hope that helps you. Okay, Server Dynamic. Okay, I did App Asia, so I missed out one earlier. Hectare, okay. Winkit, I'm not sure what F is. You got to give me the full thing. What, Darren? No company name, 5277, right? So, do you even understand this company, right? Let's have a look. Oh, Foundpack, right. Okay, Foundpack, okay. Semiconductor. Let's look at their profile first. Market cap 500 million, PE about 32 here. Okay, based on quarterly 34. Listed for 3.94 years, full history 20%. Let's look at their financials here. Last 4 years, well, 35, 50 million sales, quite decent. They also pay dividends every year, about 30 to 40% of their profits they pay out. Somewhat generous. Cash flow is very, very good. Operating cash flow, free cash flow, except for 1 year is negative. That's fine. Also in a net cash position, 51 million in cash and almost no debt, 3 million in short-term loans and long-term liabilities. Let's look at the quarterlies. Quarterly slightly down, but they're still profitable every quarter. So about 15 million in net profit on a quarterly basis. Their financial year end is 30th June, right? So they just finished their first quarter. So generally Q on Q, I think they're only down slightly, not a lot. But that's on Q09 2020, which is ending September. All right, so that's it. Okay, so let's look at, so that's it for Foundpack 527. Wow, FinTech Global. Okay, FinTech Global. Okay, okay, let me go and see. FinTech Global. Let's look at the financials. FinTech Global, I don't think it's got anything to do with FinTech, like financial tech, yeah. It's just the name of the company. Okay, Bolo BS, let's look at this. Let's look at the market cap first. Market cap is 142 million. Their financials, let's look at their financials. 10 years, okay, so you've got a 15% score, right? So they changed their financial year once year, 14 months. Sales was 6 million. It's now 20 million last year. They lost money, but so this is someone asked me this in a mentoring session last week. So you see their turnover is 20 million and their net profit is 200 million, right? So how can this be, right? How can revenue be more than 200 million? So this gain was brought about because of shares that they bought and the price of the shares went up dramatically, right? So there was a mark-to-market realized or unrealized gain on invested securities. That's why their profit is so high. So if you use PE as a guide, then this is not telling, right? Because not every year you're going to write this kind of profits in. Zero dividends last 10 years, okay? Almost no operating cash flow, right? So even though they wrote 200 million in profit, is negative operating cash flow. They have about 47 million in cash and 38 million liabilities, so they're also in a net cash position, right? So either a turnaround or you guys can figure out whether fundamentally it's good or not. All right, so that's for FinTech. For MIC, Asia Playa, okay. So we actually did write an investment research report on Asia Playa. You can actually download it on our Facebook. So go and check out, search for it. The link is actually there. Asia Playa market cap about 185, 200 plus million because there's been a lot of warrant conversions, right? PE, well, made a loss. Rolling quarter seems like a lot, 28. The share price has been falling from 40 cents, 31 and a half. I'm not sure what it closed off today. Based on their financials, so this Asia Playa is a little bit of a turnaround company. So you know, they are because of the pandemic, they are kind of luck has changed because everyone needs those they call it plexiglass. You know, those barriers between you and, let's say, the cashier, those plexiglass. So there's been a big demand for acrylic because of COVID. There's barriers, right? So based on their financial numbers, you're not going to see a lot. You know, 61 million to 73. At the peak, they made about 4 million in profit. No dividends. I'll stop paying dividends last 3 years because they had losses here. They have cash flow every other year, but except only for 2 years here. Free cash flow negative for last 3 years because they invested it. 25 million in cash and 12 million in short-term loan, long-term loan. So also in a net cash position, right? Of course, if you look at their quarterlies, let me look at a Q-on-Q. Except for Q2, you can see their turnover has jumped 49%, right? So from a loss of 2 million to a profit of 4 million in 1 quarter. So they made 4 million in 1 quarter versus their best year, they made $4 million, right? So they're a possible turnaround company. All right, so that's how you kind of want to look at them. All right, so that's for Asia Ply. Okay, so only okay. Look, I didn't realize it's almost been an hour, but let's so don't forget, tag 5 friends and I'll kind of post it at the top. Now these sessions normally I won't be able to answer all questions, right? All companies, but because there's so many companies you will look at, but I will try my best and just tag 5 friends if you want to put your company straight to the top, right? So I've got GCan here. Now, for those of you who are interested, we are doing a little bit of a December special, end of year special. We actually have an upcoming course in January, right? We call it the Value Investing Program. It's a 3-day program right here where I'm sitting, right? This is where our office and also our training center is as well. So you'll find out how to analyze stocks, how to look for undervalued stocks, how to value stocks. We cover in the 3-day session. Of course, we show you how to use all these financial numbers as well. The whole idea is to make sure you guys become a more confident investor, right? You can sit here and kind of do the analysis as well. So, you know, if you're interested, just put in the comment section VIP at the bottom below. We're doing like a Christmas special, right? So for those who are interested, just put VIP in the comment section below, and my colleagues will be in touch, right? Investment in yourself, don't forget, just don't look at investment out there, right? So if you want to continuously be able to compound your portfolio, you also have to invest in yourself, right? So what better than invest in some education? All right, so if you're interested or you're just keen to find out a little bit more, just type VIP in the comment section below, and my colleague will be in touch with you. All right, for those of you who are interested, I strongly suggest you guys check it out, because ultimately you're going to get so much more from this program, right? And you kind of have looked at what we're already doing, right? So it's actually January 22nd, 23rd, 24th. It's before Chinese New Year, so you don't have to rush. You know, the market's going to be there. You know, if there's going to be a super bull run in the next 5 years, you definitely want to be prepared. All right. Now, let's look at George Ken. Okay, so this is George Ken from Yin. Okay, Yin MK, George Ken. Let's look at them. Well, they used to be like a water meter producers, and then they managed to get the LRT or MRT project as well, went to construction. Their market cap is 446 million. Okay. Let's look at some of their financials here. Latest price 85 cents. So their sales went from 165 million to 600 million, and it's fallen back to 300 million. However, they are still profitable, 25 million to 41 million. Fairly okay on dividends. Used to be 40-50%. That's how much they pay on dividends. Their financial end is 31st March, right? Cash flow wise, except for 2 years, they were negative cash flow. Every single year they were cash flow positive. Also for 3 years, they also have free cash flow. In terms of debt, they don't have a lot of debt. They have about 275 million in cash and 67 million in debt, right? So another company in a net cash position. Let's look at their quarterlies. Oh, it's all red, sea of red, right? So I guess if you're in a construction business, then this is bad, especially for the period of MCO, right? But it seems that their revenues is back up, or almost coming back up. They are still profitable. They're not loss making. They are still profitable. but they are less profitable than when they were last year, right? So when you look at the valuation, their PE is at about 15 versus 10 if you use last year's numbers, right? Because earnings have fallen. Of course, the idea is it permanent or temporary, right? So for 33 years of history here, its compounded return is 1.76%. So pretty much, if I kind of look at the share price, it seems quite flat, I would imagine, right? Yeah, so if I draw a line from here all the way here, it almost seems like it's a flat line, right? Almost literally a drop, right? So the question is it cheap or expensive, right? So it has been rising slowly over time. Perhaps I don't know what projects they have, right? So that's for you, ENMK. Okay, so ML, I also hope I answered yours. I covered Asia Ply. Lawrence did that. Jun Hong, okay. Jun Hong. Heineken, let's check out Heineken, okay. Heineken Malaysia. Brewer, okay. I think Heineken, no one needs explanation. Used to be called Guinness Anchor. Sales went from 1.3 to 2.3 billion. Obviously, I think in this period they are definitely affected. 300 million in profit. So I guess they are extra generous with dividends because they have to pay out the head office, Heineken. If you look at them, they pay out about 100% out in dividends. Whatever they earn out, they pay out everything. Cash flow is actually very good, 400 plus million. Free cash flow is about 300 million. They don't typically keep a lot of cash because they pay out everything in dividends, right? So 50 million in cash and 139 million in short-term loan and long-term loan. Well, looking at quarterlies, I think goes without saying it's likely going to be all red as expected, right? Q2, because you're locked down at home, they actually wrote down a quarterly loss here. But it seems that for September, they are almost back in action. 473 million in sales and 61 million in net profit, right? So they last Q3 last year, they made about 100 million in profit. So that's quite a fair bit, right? So of course, the question here is if they rebound back to where they were before, is it cheap or expensive, right? So the PE based on last year's earnings is 21. Based on latest quarter is 34. So the question is if they can recover back to those numbers again, then you're buying this company at a PE of 21, okay? So if I kind of look at their price and value divergence, yeah, so you can see they hit their peak of 30 and then they're back down again, right? So question is it cheap or expensive? It could be. So if you want to figure out, if you click on industry, there are generally two brewers. You have Carlsberg and also Heineken here. Heineken is 6 billion market cap. Carlsberg is not too far at 6.6 billion. So they are both trading at about 20 plus PE here, right? Typically, they trade, from my experience, they trade between, 20, they trade as high as 30, PE of 30 as well for these companies, right? Because they are very, very generous in their dividends as well. So the question is whether or not they can come back to those numbers eventually, all right? So if you're a Heineken shareholder, go and drink some more, right? John, okay, John, let's see what we have here. Air Asia. Air Asia, I don't think we have much to look at. Simply because we are in a pandemic and obviously they are affected. But nonetheless, let's look at their market cap today. It's 2.9 billion market cap, right? Let's look at their financials. Look, the historical financials are obviously good up to the pandemic. If you look at this, the pandemic in 2019 kind of only hit in December. But they already started making a loss here, right? So great sales, 3 billion, fantastic growth story, 11 billion in sales, right? They also did pay a special dividend before, obviously, the pandemic. I guess maybe they are regretting it a little bit. In terms of cash flow, they are still cash flow positive, 2 billion up to last year, okay? I don't think they are definitely cash flow positive now. Their cash, 1.7 billion was about 2.8 billion. Of course, they have about 15 billion in liabilities. Of course, you're seeing a change because there is this thing called, so they sold their planes and then they leased back their planes. So they have these lease liabilities now, which everyone in the industry is struggling with right now. So, look, quarterly is obviously not going to be good. It's going to be probably quite scary. But they used to doing 3 billion in sales. Now they're doing about 400 million a quarter. Obviously, a loss 800 million, 900 million, right? So for the last 3 quarters since the pandemic hit, they've been losing about 800 to 900 million a quarter. So likely, if Q4 is the same, they're probably going to hit a loss of 4 billion in the year 2020, right? So the question is, if they rebound, do they need to do capital raising? Will you be diluted as a shareholder? So even you buy it at 82 cents today, the question is, what's going to be the new capital structure post somewhat restructuring of this business? All right, John. So just I hope that helps you. Okay. Okay. So it's already 9 o'clock. Again, if you want me to push it up, just tag 5 friends. I'm happy to answer any questions that you guys have. As you can see, my hair is starting to grow out, and that's why I'm wearing a cap, right? All right, so I'm gonna check out. Can I see what else next? Okay, I'm gonna go chronologically. MHC Plantation. Let's have a look. I assume that they are in palm oil. So if we go to the financials here, 27 million in sales jumped to 300 million. Profit has kind of come down, but they must have written off something because their gross profit is still somewhat there. Didn't pay a dividend last year, but every single year they have paid dividends, right? Cash flow positive all the way, which is good, except for a couple of years they've got free cash flow as well. They've got 37 million in cash and about 187 million debt, right? So let's look at their quarterlies. I would imagine if they're in oil palm, their latest quarter should be quite good. Yeah, you can see already that Q3, because of higher oil palm prices, it was 100 million in sales and 69 million in the same quarter last year, right? You can see the thing about palm oil companies is if you keep these prices very, very high, they become very, very profitable because they are cyclical in nature. So you can see even their sales jump, say 70 million to 100 million, their sales jump probably close to 50%, but their profit almost 4 times, right? So you can see that what happens is that when they sell at much higher selling prices, their cost is generally quite fixed, right? So whatever profits flow straight down to the bottom, right? So using PE or historical PE, again, at this point, it might not be so telling. So you have to look at a little bit forward to see whether they're cheap or expensive today. But remember, plantation stocks are quite cyclical in nature. All right, so I'm gonna do probably a couple more. Solution. Let's look at them. Solution market cap. 400 million market cap. Wow, this is loss and loss. So again, a bull of BS. So loss making, 400 million market cap. They are 15 years listed. They've got a compound return of 19.75%. All right. So let's look at Mr. Solutions, right? 60% FQA ranking. Let's have a look. Revenue is same as it was 10 years ago. Last 2 years, they've been making losses. They don't pay dividends last 2 years, except for 4 years. The rest, they didn't really pay dividends. Generally, cash flow positive, except for the last 3 years here. Negative free cash flow. They got 19 million in cash and about 6 million in short-term loan, long-term loan, right? So if you're purely looking at financial numbers, you're questioning how they value this company at 400 million. It doesn't seem to actually, you can't see it from the numbers. All right, no wonder you're asking me, right? Look at the share price. It's insane, right? Look at this. What? 20 cents to $1.80, right? So if you look at these share prices, yeah, so you look at it, it's 10, 12 cents all the way to 1 something, right? So the question is, share price has risen quite dramatically. Question is, unless there's a story behind it, you're buying a story. The fundamentals don't seem to support some of these prices here we're seeing today. But of course, that's my personal opinion. All right. Okay. So I'm gonna do a couple of last more ones. And okay, Tasco. Let's look at Tasco. So if I'm gonna zoom out here. So let's look at their financials to see if they support bull or BS. Okay, market cap 500 million. Okay, market cap based on their P ratio 55 and 28. Okay, seems rather high. Let's look at the financial numbers. Their numbers are pretty decent, 87.5. Okay, let's look at what we see, right? Revenue is about 400 million, about 700 million today, but their net profit has fallen quite significantly, although their gross profit has not fallen. So kind of figure out why. Okay, generous in dividends, 40-50% payout every year. Operating cash flow 36 million and 70 million here. Free cash flow almost every single year except 1, 2, 3, 4, 5. Well, quite decent. They got 100 million in cash and 200 million in debt, right? So, not overly indebted. They seem okay. I guess the big question here is, let's look at the quarterlies. Have they improved dramatically? Tasco, right? So, well, they have doubled their profit in the last quarter. Even during the pandemic period, they were still profitable. So it seems like there's a bit of a rebound here. If you look at a Q-on-Q, well, it's generally up except for Q1, which is expected because of the pandemic here. I guess the question is, what's their story going forward, right? Are they able to double, triple their earnings? If they are, then the question is, are they sustainable? And then this will give this PE a little bit more sensibility. All right, so I hope that helps. Okay, I'm gonna do a last one here because it's already 9:06, right? Okay, let me see who I have. Okay, BJ Law. Okay, MCE. Let's look at the financial numbers. MCE. So the tip here is this, right? Make sure you guys tune in early every Tuesday when we run a pool or BS session, so that you can post it earlier. And I make sure that I can cover it as well. Of course, if you want to be pushed straight to the top, just tag 5 friends. Make sure I'll answer some of the questions as well. So let's look at MCE Holdings. Okay, so let's look at their profile. 66 million market cap, pretty small. Been listed for 23 years. Okay. Again, do they have a PE? Also no, loss making. So if I look at their financial numbers here, well, 65%. That's where they are at. So in terms of turnover, the turnover have fallen. Seems like the last 1, 2, 3, 4, 5 years they've kind of been losing money, and you kind of got to figure out why they've been loss making. Except for that 1 year that they made profit, they actually paid a dividend. Every other year that lost money, they didn't pay a dividend. So dividend is quite choppy. Well, they've been cash flow positive generally, except for the latest year, which is last year. And in terms of cash, they got 2 million in cash and about 8 million in short-term loan and long-term loan. All right, so without cash flow, this company might be struggling a little bit unless they have to borrow more money. All right, so wow, okay, so everything is negative except for Q4, right? Which is July ending, August, September, October. So they should be reporting their next quarterlies pretty soon, right? Within the next couple of weeks, we should see it. So they are still loss making currently. So question is, can they do a rebound as well? All right, so that's for you, BJ. Okay. 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 Regarding Sabada, actually, I haven't looked into it yet, so I have no opinion. But maybe ask me on Sunday again. Okay. Denounce, is it turnaround potential? Well, did we cover this earlier? Denounce. Let me see. Turnaround potential. Let's see. Denounce. Denounce. Okay, let's have a look at them. Um, Let me look at the profile first. Market cap 158 million, listed for 19 years. Let me look at their financial numbers to see if it's a turnaround or not. Obviously, if it's a turnaround, normally you don't see a lot, but this revenue has gone up. It's just making less money, right? So we're not sure why. No dividends last 10 years. Generally, cash flow positive most of the time. Generally, free cash flow positive most of the time. 32 million in cash and 58 million in short-term loan, long-term loan. So not to say too heavily in debt. Let's look at their turnaround. Here we go. Okay. Well, they seem to be turning around. If you look at the last 4 quarters, 1, 2, 3, 4, they seem to be turning around. Because if we do a Q on Q comparison, generally up on most counts, right? That means they are profitable and they're turning a loss into a profit here. And it's quite significant as well if you look at it. Except for the MCO period, they make about 3 million, 2 million, right? So for 150 million market cap, I guess the question is, at 8 million, you're looking at a PE of 17, right? Well, if they're actually going to turn around, then 17 PE might be interesting to look at potentially. Of course, I don't expect them to pay any dividends, but if they do, no dividends here. So I guess you have to go and study the story a little bit. Then you kind of figure it out. But interesting, right? Interesting. Okay, I'm gonna do maybe my last one here. Vortex Consolidated. Wow. Okay, these are all pretty out of the world. Fine names, right? Let me kind of check it out. So if I click on profile here, let me see what I have. 59 million market cap, very small. Last 16 years, you can see it's all trading below the IPO price. If I look at the financial numbers, wow, okay, doesn't give you much to work with. All right. Wow, loss making all the way. Not much to comment here, to be honest. No dividends last 10 years. Most of the time negative cash flow. Most of the time, even the last year, negative free cash flow most of the time, except for 1 year. 44 million in cash and 71 million debt. Potentially, this could be something that was injected in it. I need to understand what the business they're in. Is it potentially a turnaround? Again, when you remember turnaround is you're gonna carry a higher risk, right? Because it's gonna be very, very much story based rather than being data driven and yet to be executed, right? Of course, the benefit of a turnaround, if you spot them, they make a lot of money for you. But if they don't turn around and they turn the other way around, then you also will have a risk of losing money as well. I'm quite sure the price must be interesting for you guys to look at. Yeah, well, the price didn't move up; it's all the way down. So I guess your guess is as good as mine. What is the new injected entity into Vortex, right? Because the numbers can't tell me anything else. All right, look, I hope you guys had a good session here. It's already almost 9:15, an hour ish. As you know, every other Tuesday I will run this segment. It's called Bull or BS, where I will do a live analysis of any company that you want me to cover. Right? I'll do this for an hour every Tuesday. So don't forget tag and share with your friends. where we will actually cover some of these stocks as well, right? Unfortunately, I was not able to cover every one stock here, but don't forget, we're actually doing a little bit of a December special. So if you're interested, we're actually running a 3-day program on value investing, where we're actually going to cover how do you set up the techniques, how do you value a stock, how do you know whether this company is good or bad to begin with, right? So even if you have no financial knowledge, what I've just covered here, zero financial knowledge or zero accounting knowledge, I'm going to show you how you can read financial statements easily, right? In the 3-day program, right? So I'm running it personally on January, so 22nd, 23rd, 24th. Hopefully MCO will be lifted then. Of course, we still have to follow SOP, but if you guys are interested, just put in the comment section below, just put VIP, and then my colleague will be in touch with you. All right. So we're having a little bit of a December special. Even if you're a little bit curious, just put in VIP. Someone will give you a call, and then we'll follow up from there. Right. Otherwise, everyone, thank you very much for signing in, for tuning in tonight. I hope you are staying safe. COVID numbers are kind of going back up again. But don't forget to tune in tomorrow. We have our Mandarin session at 8 p.m. and on Thursday we have our future proof, which is anything to do with the future, right? Where Andrew will be hosting, and then on Sunday night we'll be back with Ask Us Anything. All right. Again. Thanks again, everyone. Oh, don't forget Thursday, tomorrow night, we actually have Mr. Benny Lee to do a mentoring session under ET Online Campus at 9 p.m., right? 9 p.m. So don't forget to tune in after Future Proof at 9 p.m. Benny is going to be doing a mentoring session on anything to do with technical analysis, all right? Don't forget to join the ET Online Campus. Otherwise, thank you very much for everyone for being here. I'll see you guys again at the end of this week. All right. Good night and bye-bye. So let me